Good morning, everyone, and welcome to my gold and silver video analysis. Today, I'll be going over the gold market, the silver market, the Dow Jones, as well as the platinum market. We're also going to do some ratios. I've been meaning to do a video here. I apologize for not getting it out to you guys. I do want to wish everyone a happy new year, and of course, wish everyone the best new year, lots of success, lots of good health as well. Okay, not just only about money, but also about health, right? So at any rate, we're gonna do a quick analysis here on gold, silver, the Dow Jones, and also ratios. Ratios are very important, and we're also gonna look at the dollar index. So a few markets to go over. This video is probably gonna go above 15-20 minutes. As always, I always do the gold and silver analysis first, and I'll put the dollar index third. Just so you guys can kind of see what I'm looking at here in this market. Gold last year ended up very positive, unlike some of the other markets out there. It seems to me that commodities are starting to find a floor, and I've been calling the floor here on gold here for quite some time. And I really do expect that the market is going to continue to go higher, obviously, given today's economic uncertainty. But then again, right, the uncertainty thing is kind of a broken record type, right? Because we've been saying uncertainty here for quite some time. But again, with all the political turmoil, all the division here in the market, I would assume that something eventually has got to give, right? So anyway, let's get to gold. This is the gold monthly chart. You know, the market technically could be trading in a range, right? So if I were to delete these lines, and we can see that the market pretty much is in some sort of a range, right? But we do know that there are some buyers in this area here. And again, based on that line that I drew before, right, we can clearly see that the market currently is testing this level of support, this ascending trend line, right? So from here, I'd probably look to test this level here, the 1350 again. Easily, I see us testing this level here very, very soon. And if we look at the weekly chart now, we can clearly see that really the buyers seem to be around this level here. And again, this would probably be the next level where the buyers, where we're going to find some buyers. And then above this level here, we'll probably look to find some more buyers over here. So I really wouldn't be surprised if the gold market would come back down to this level here, the 1234 area, maybe the 12.25 range. Maybe go a little bit deeper, but again, I still see that the market, I still expect the market to hold within this trend line here. So wherever it's going to go, I probably expect to move like this and continue to go higher. Or we can probably just see the move where this market just comes down here a little bit and we keep going much higher. At least, again, to test that 13.5, 13.75 level, okay? As far as the daily chart is concerned, again, we are finding some resistance over here at this level here. And yeah, as of right now, I think I'm pretty confident in saying that I do expect the market to come. Wherever it comes down here, I do expect to find some solid support. We can probably even look at this trend line here. Okay, and maybe we'll see gold retreat back down to this level here before continuing to go higher. But only time will tell at this point. But at this point, the market does look very, very, very healthy. I think a pullback would be very, very beneficial for the gold market. But for now, we just have to wait and see what's going to happen. As far as silver is concerned, okay, silver drawing up a really nice bottom here, okay? So we can clearly see that every time the market comes down here to this level here between 1360, which was the multi-year low, all the way up to, I would probably say this was the level here. And I'm just going by this low here, right? So the market came down, found some buyers, big move to the upside, again, traded sideways, and again, was able to take off. And again, these are the healthy moves when the market gets out of a range, comes back down, finds some support, right? This used to be resistance, right? This used to be resistance, right? It kept pushing us down, and then eventually we broke out of there. Again, now we look for that resistance to be support. Again, another big move, and what you find is that it trades sideways again. Again, we find the big move to the upside. From there, we test that resistance now turns support. We find some support, and then the market takes off again. So now where are we now, right? We're fast forward to last year, right? Where in September, it seems like we found a bottom here, roughly around 1394. You know, it's funny because there's a big investor, Jim Rogers. I'm a big fan of his. Doesn't really like to give short-term market analysis, but he does like to predict a market long-term. And he always says that, you know, when the markets go down, it's really scary to buy, especially when the markets are dipping, especially when you don't understand why they're dipping, right? And he always says, I hope if gold goes down to 1050, or if gold goes back down to $1,000, he says, I hope I have the guts to buy, right? Because again, when that market is so low, you kind of get afraid to buy. It's really what happened. And really probably what I expected that was going to happen. I've always said that if I see the market come back right below $14, I'm going to buy. I didn't pull the trigger when the market came below this. Again, it's just a little scary to see this market plunge the way it was plunging. But again, it seems like we're out of the danger zone. And it does look like the market did trade sideways for quite some time. Finally did a really nice breakout. And again, when we talk about breakouts, we want to see healthy breakouts. This definitely seems like a very healthy breakout. I like the idea of buying here between 15.25 all the way down to 14.46, anywhere between 15 and a quarter all the way down to 14 and a half. I like those buying range. And again, what am I looking for? I'm looking for the market to give us that big move to the upside that we are expecting. A lot of resistance over here. All right, all these levels are resistance. So a lot of resistance, but then again, we did have a lot of support, and the support looks like it's holding, right? So again, I expect silver to go much higher this year. I expect silver to come back up to at least the 17 to the $18 range. I do expect the market to test this level. If we see something like this, I can easily see silver going to $25, $26, maybe above this area here. Between $21 and $25, $26 this year. Okay, I didn't get the 15 and a half prices on gold that I predicted last year, but I do believe it's going to happen this year, and I do believe that the $25 price tag on silver hopefully will be this year. Definitely a test of $21 again, because again, I do see a little bit of momentum, especially where all these big buyers seem to be, right? And again, the big buyers are the ones that move it along, right? So let's go to the dollar index now. The dollar index, pretty nicely defined wedge. Again, these wedges are very bearish, right? If the wedge would look like this, then that would be a bullish. Wedge, right? But that's not what we're seeing. What we're seeing is a very bearish. We're seeing a very bearish wedge. Big move to the upside. Now we find some sideways consolidation here. And then from here, I do expect the market to come back down and really do what I expected it to do here, okay? But again, we are out of that range. We're out of that wedge. So I do expect the market to continue to go south, especially at these levels. And we're already at the sell zone here. So I do expect the market to do one of these, okay? And come back and test this level here. Again, a break below 88 would be, I would think, catastrophic here for the US dollar. All right, let's go to the Dow Jones. And the Dow Jones, again, I like the idea of shorting. As you can see, I already have my box here where I like to short. Again, after a big move like that, you can only assume that the market is going to continue to sell unless this is a giant V-shape formation. If it's V-shaped, then you're probably going to have a test again of the highs. I just don't see it. But then again, I didn't see the highs being at 27,000, right? At 18,000, I thought it'd be very difficult to go above 21, 22. Here we are at 24. But again, it does seem like the Dow Jones is starting to lose a little bit of ground here. If you look at the monthly chart here, you can see that we're just technically just trading sideways, right? There's really nothing Nothing crazy. But again, you have that big nasty candle. So based on this monthly chart, you can probably short over here around 25, put a stop loss at around 27 and 3, maybe and a quarter, and see if the market gives us what we're looking for, which is that big move to the downside. I mean, eventually, I guess it has to happen, right? I mean, maybe we'll see the Dow Jones at 50,000, but I can't imagine we're going to see it at 50 before we see a nice little correction, at least down to the $14,000 range. As you can see, all these markets just move up and then they test resistance or support. Again, in this case, we're looking for the market to, after a big move like this from 65 to 27, you would expect the market to come back down and at least test this level of resistance here. So resistance now turns support, I'm sorry, at least the $18,000 range. But technically speaking, that wouldn't be a crash or a serious crash. I would probably suggest that the market is going to go down at least 50%. Like most markets that really crash, give you at least a 50% correction. Again, that's my analysis on the Dow. I'm bearish the Dow Jones. I think any shorts above 25, actually even at this point, if I'm looking at the shorter term time frames, again, I like the idea of shorting. And again, this is a long-term trade. This is not a short-term trade, right? I definitely like the idea of shorting within this level here. So between 24 and a half all the way up to 27, I like the idea. I'm bringing this thing back down here to at least 18,000. So again, great risk to reward. You're looking at about a 3,000 point to about a 5,000 to about a 8,000 point move to the bottom. So again, great risk reward. I really like this trade here. Okay, let's look at the ratios for gold and silver. All right. So the ratios for gold and silver, again, as we all know, and I've gone over these things 1,000 times, the gold and silver ratio here, what do we have? We have a broadening formation, which is very bearish. We saw anytime, just for those of you folks that are joining me for the first time, the ratios basically, when the ratios go up, then you're usually in a bearish market. When the ratios are coming down, you're usually in a bull market for the metals. And this is how many ounces of silver you can buy with an ounce of gold. Currently, you can buy about 83 ounces of silver with 1 ounce of gold. These are the ratios. Silver tends to move down faster than gold when they're both in a bear market. Silver also tends to move up much faster than gold, also when it's in a bull market. That's why we look at these ratios. So again, anytime you can buy 85 or 80 or anything above 82 actually, anytime you can buy silver and the ratios are around 82 and higher, that usually suggests that the market or that the precious metals market is looking to find a bottom, and we are anticipating that gold and silver will rally. Silver will rally much faster than gold. So again, this analysis just tells me that, again, back when we saw 86 just a couple weeks ago, again, this suggests that the buyers for silver are coming in. They're trading some of their gold in for silver. So again, we do anticipate that eventually within the next few years, who knows, probably by 2021 or maybe 2022, we'll see gold and silver trading in at around 25 as far as the ratios are concerned, which basically means that gold should be able to purchase only about 25 ounces of silver. Again, this is a broadening formation. The highs are getting higher, the lows are getting lower. A broadening formation is very bearish in its nature. So again, I do anticipate that the gold and silver rally will continue to go higher and higher and higher, much, much higher. Again, some of you guys have heard my predictions. I expect silver to be at 150 and I expect gold to be well above $3,000-$4,000. Okay, that's it for my analysis, guys. I hope you enjoy my analysis. You know what? How about we throw in some platinum versus gold. Historically speaking, platinum usually trades higher at a higher premium than gold. Currently, all right, you can currently platinum is much lower than gold. Platinum is trading right now at 790, while gold is trading at 1280. Usually the ratios is usually about a maybe about a 1.5 or something like that. That's usually where it is at an average. So again, platinum trading in at 0.61. That's how many ounces of gold you can buy with a platinum ounce. Currently is at 0.61. Again, this usually goes down. This is kind of backwards in the gold and silver, right? Because now we're buying gold with platinum, not silver with gold. So now a giant wedge, just kind of like that dollar wedge I was pointing up. This, again, I've been looking for the support. I've been tricked a few times here. We can see here big moves to the upside. And again, I'm wrong here. I was wrong here as well. Again, you have a big, nice engulfing candle right here. So, again, the market tricked. Again, the market tricked again. But again, eventually these technicals work out. And ultimately, I do expect this wedge to be a really nice breakout. And I do expect that platinum will surpass the price of gold here probably within the next few years. So again, if you want to talk about preservation of wealth and preservation of capital, this is the way to do it. Gold and silver, platinum. This is what I like right now. I like these, and if you look at the commodities across the board, it looks like they're all making a move to the highs. Now we're gonna do some stocks. You're more than welcome to if you're only interested in gold and silver. But I just wanted to point out a couple things here. Apple crushing. Apple's, pretty much crashing from 230 to 150. You have a almost a $100 drop. Let's look at Amazon. Amazon is another one, found some support here on the 1400, but again, these trend lines are usually tested, so I do expect Amazon to come back down to 1,000 from 2,000. So again, another 30-40% move to the downside. GoPro, big company, look at this, from 98 to $4. I think GoPro will probably come down to $2 when the market crashes. I do expect the market crash. And maybe that'll be a good time to buy GoPro. Heck, at a $2 premium, maybe at $1. That'd be insane. Tesla, again, Tesla only trading sideways here for the last couple of months. Has not been able to go above 1,400. Finding some support around 250. Again, extremely volatile. I do expect to move down to the bottom here. What else can I show you guys? Google, again, Google. All these stocks are dropping. All these stocks are serious. Again, you look at the commodity sector. Let's look at sugar. Again, sugar, just again finding a floor here. And again, we do have some nice, at least, some nice indicators that the market should continue to go higher. So again, it looks like the commodities market, just in general, whether you're looking at orange juice, cattle, whatever, all these things are at their lows, and it looks like they will start going up soon. All right. So again, huge engulfing candle here on sugar. I would expect the sugar market to continue to go higher. Hopefully, we found a floor here. Worst case scenario, maybe we'll come down over here. You know how they do it. They'll take some folks out of the market, and then the market will go much higher. So again, I hope you enjoyed the analysis. Happy New Year to everyone, and good luck in the market. And we'll talk to you guys next time. Bye-bye.